Hi, good afternoon, everyone. Just to give you a little bit about my background, I've actually created a number of insurance companies in the past, and during the past 12 months, I've been heavily involved with mentoring a number of startups through Startup Bootcamp in London and also independently as well. Today, I wanted to focus a little bit more on commercial insurance. The personal line side, there's a lot of exciting things happening with startups, with InsurTech startups, and the commercial side, it's a bit slow. I did wonder why I was going to take on this ambitious topic and try to squeeze it into 20 minutes. And I shared my thoughts with a company that I've been mentoring, and they reminded me that I was part of a team where they had 5 minutes to tell me their entire business plan, so they had zero sympathy for me today. So I'm just going to pick one or two opportunities I believe in the commercial insurance sector. It's certainly a topic I could talk about for many hours because I think there's so many different opportunities. And then what I'd like to do is just sort of wrap up what myself and investors are typically looking for when InsurTech startups are giving us a pitch on their businesses. As everyone's heard today, it's all about the customer, and quite frankly, risk managers are extremely demanding and they're extremely frustrated with the commercial insurance industry. And I actually believe there is a way to simplify risk management solutions. Most risk managers that I've met over the last 35 years, they have a love-hate relationship with the industry. I mean, my gray hair started in my early 20s when I had a risk manager that would actually call at 4:45 every Friday to scream and shout how horrible the industry was. So typically what I would do is transfer the call to the president of the company so I could share the wealth of the love and the joy that I was receiving from the clients. One of the key areas that I think the industry really is falling short on is when you look at the various silos within the commercial insurance companies, one of my key frustrations is the product silos. Not surprisingly, many of those product silos are driven by, their profit silos. But when you're talking to a risk manager, they're looking for risk management solutions. They're not looking for specific product solutions that the insurance companies are offering. So, and I find in many instances that the cross-selling actually is not that good. And a lot of it, again, has to come down to the fact that you're competing almost internally with your own profit centers, or quite frankly, there isn't a shared knowledge base internally to really, articulate to a customer what the insurance companies can offer. So for many of those insureds, they're going to an insurance company to get a product response, and then when they can't get the full response, they're either running they're running the non-insured elements through either a captive or they're actually self-insuring that, and quite frankly, that has a huge impact to their balance sheets. And I think that's definitely a missed opportunity that the commercial insurance companies really aren't taking on. What I propose to many of my clients is eliminate these silos. You're always going to have the particular technicians, a D&O expert or product liability or marine or property, but really use technology. I mean, when you think about it, we talk about big data. Think about all those data elements, and yet they stay within those particular silos. If you have the technology, you can start looking at the various patterns across all of those product silos, and you start thinking about products differently. You're getting closer to the language that risk managers are talking about. Risk solutions versus product solutions, and I think that's even more key when commercial insurance companies are expanding into other territories. During the last 5 years, when I've been meeting risk managers, particularly in Asia and Latin America, their frustration is that they feel they're being sold Eurocentric or North American-centric products. And you sort of can't argue with them in many cases. What I also find quite interesting is during the last 5 years, I have been tracking product development in China. Let me tell you, be very nervous, anybody that's at a commercial insurance company here. The Chinese market knows how to develop products. I mean, I have a massive spreadsheet that I'm actually exhausted updating with how many products that China rolls out. Now think about combining that political will to create those products, and you combine that with technology. When these local Chinese insurance companies start expanding into the West, the Western companies need to start shaking in their boots, because these companies will definitely show them how to lead the way in providing risk solutions to clients. With respect to big data, we always hear about the insurance industry using big data, but I have to say, don't assume that they're capturing all the data. Yes, they do it quite well with property and the automobile and some marine, but the reality is they're not using technology to capture all of the elements of data. Clients provide a lot of information, and each product tends to sort of really drill down to their specific area, and yet there's still a whole plethora of data that is just sitting there on the wayside. And I think that's just sort of a wasted opportunity. And even when you start looking at areas of claims, certainly with respect to claims, the underwriters tend to look at if there's a continuation of certain types of claims. They look at that in terms of how do they change the renewal premiums, or quite frankly, how do they exclude those exposures in the future. I would actually view that as a way of as an opportunity to monetize that particular exposure. You don't have to provide the same product, create a different product. You can monetize that opportunity. And then, quite frankly, for all of those claims that are excluded by the policy, there's a way to sort of track that information, and you start looking at those trends, and you just think, what type of product can I create? It doesn't have to be my traditional D&O policy. It doesn't have to be my traditional, general liability policy. It's really time to start, thinking outside of the box. And I think, and I've always been a big believer in using technology to track these trends. Not surprisingly, if you speak to many underwriters or claims people, the first words you hear out of their mouths is, "I hate my system that I have to use." And it's just a consistent statement all the time. I had the good fortune to work with an international company that was thinking about setting up in London earlier this year, and their legacy systems were terrible. And so I went out into the field to look at, to meet with different vendors, to look for new opportunities. And it was quite interesting that I even put a post on my LinkedIn, and the feedback I got was basically everyone saying to me, there is no one system, you have to speak to 5 to 7 different types of vendors. Well, then you start having a communication problem. But more importantly, the existing systems that are in place, there's too many frictional costs, there's too many touch points. A named insured is typed in, 5, 6, 7, 20 times. I'm a time and expense guy. That's money. That's a lot of money that's wasted over the year. And then when I relocated back to London at the end of 2014, the broker's biggest complaint was that underwriters were spending up to 40% of their time on administrative work. That, to me, is telling me the systems that are in place are not very good. In terms of wrapping up, investors will always ask me, what am I looking for when we're trying to support a new InsurTech initiative? Quite frankly, productivity. Are you going to be able to get customers? Are you going to be able to generate revenue? Retention. Are you going to be able to retain those clients? Quite frankly, if you're losing clients at a faster speed than you're gaining new ones, you're not going to survive. Customer service. We've all heard it from everybody. That's absolutely key going forward. And profitability. Sorry for me, what's the bottom line? Are you going to make money? If you're not going to make money, no offense, it's not a charity. Let's move on. And then, quite frankly, regulatory. What's amazing to me is many of the InsurTech startups that actually are going to sell insurance or going to provide advisory services to clients to sell insurance don't realize that potentially they are going to be a regulated entity. I would strongly encourage that you at least acknowledge that in your business plan when you're talking to investors. And more importantly, go and meet with the regulators. They're extremely friendly. You're not going in there to say, this is what we're going to do from day one. You're getting the dialogue started, and I think that's really key going forward. In conclusion, the reality to me is a true disruptor is changing the character and structure of decision making. And if you can utilize technology to do that, I think that's absolutely key going forward. I don't have to repeat it. It's all about the customer and the story. And with respect to InsurTech, what we're, typically myself and the investors, what we're looking at is creativity, Does this system create efficiencies? And quite frankly, can you monetize products that clients want to buy? There's no point creating something that nobody wants to buy. And really, at the end of the day, again, for companies that are looking to sell insurance or provide advisory services, having the combined knowledge of insurance and regulation is absolutely key and fundamental to your success. That's it.
Great. Thanks very much.